Well, the reprieve is over. Just as the economy is facing high interest rates and inflation, people will soon have to start paying off those student loan debts once again. The suspension of those payments took effect at the height of the pandemic, but that expires in October. And many who were hoping their loans might be forgiven were dealt a devastating blow last week when the Supreme Court struck down that Biden administration plan that would have given them some relief. So here with some tips on preparing for those payments, I'm joined by our financial expert, Vic Russell. Thank you so much for coming in.
Meredith, thank you for having me. Good morning and happy belated July 4th.
Good morning and same to you.
Thanks.
I have to start by asking, really, a lot of people are going to have to start making these payments again, of course, after what, almost 3 years of not doing so. So given the circumstances, what should people do if they are not able to afford making those payments, or if their money's kind of been diverted elsewhere and haven't been able to save?
Yeah, it's a great question because you really need to be proactive right now because those payments start becoming due October 1st, which we may think is not right around the corner here in the heart of summer, but yeah, it's right around the corner. So it's been out of sight, out of mind, with the student loan moratoriums. It really has been. And during that period of time, unfortunately, credit card debt's gone to an all-time high at $986 billion outstanding, all-time high. And the average monthly payment on automobiles, new cars, and mortgages has skyrocketed because the interest rates have gone up. So 10 rate increases over the last year by the Federal Reserve. So there's a lot of different stressors now on people that they didn't have before the pandemic that they now have with these student loans starting up again. So you really need to take advantage of every opportunity that's out there to manage your student loans correctly, especially if you're in a crisis mode right now and you say, I really can't afford these when they come due. Because those letters are going to go out, and you may have a different servicer that you're going to have too. I know I've heard people that they've already been notified they got different servicers. So there's some work you're going to have to do, and it's not much, but there are some great programs out there that can help you with your repayment.
Yeah, and with those servicers, sometimes you don't even get the notification, so you have to check online first. But as far as the money itself goes, how can you best start preparing for those expenses since they're coming around the corner so quickly if you haven't started saving?
Well, I think number one, you take a look at your spending plan. You take a look at your expenses. I always say make every expense negotiable. What can you do with your controllable expenses to bring those down? And of course, there's still a challenge out there with groceries kind of staying a little high, even though inflation's come down significantly, thank goodness. So you start there. And then you take a look and see what your strategy is going to be about the student loan. How much income do I actually have to put towards these student loans with maybe my new debt structure now that I have since the pandemic? Since maybe I bought a new car, maybe I just got a mortgage loan this past year with the with increased payments. So you have to break all that down first. Separate your debt payments from your living expenses. Debt payments, you shouldn't have more than 15% of your income servicing debt at any one time. So you start there and see if it's a little higher than that, then you're going to need some assistance. And the good news is that the federal government's put some assistance in place since the forgiveness didn't go through, and they have some great programs on studentaid.gov. So I would go to that site, check out what programs are available there, and the one I would concentrate on is the income driven repayment program, IDR. And that's the old repayment that people are in right now. Some people got into the repayment program. If you're in repayment right now, you will automatically go into the new SAVE program. So you'll automatically be transitioned into that, okay? Which means you'll get the benefits of the SAVE program.
And from what I remember about that program, that can lower your student loan payments down proportionately to your income and sometimes down to zero.
Yeah, and it's based on income and household's family size.
Yeah, and I also want to ask, really, because these payments, everyone's going to have to start making them if they haven't already paid off their student loans.
Right.
Do you anticipate that there could be somewhat of a financial ripple effect elsewhere? Because it seems like with people needing to put money towards their student loan payments, they're going to have to pull back on other spending otherwise.
Yeah, well, I think what's happening right now is people are using credit to spend, and that's why you see our credit card, outstanding so high. So people are already in the mode of borrowing money to get their spending going in. And really, our economy is based on consumer spending. As long as people are spending, our economy is doing well. But in this case, student loan payments may make an impact on abilities people to spend more, like on vacations, like on going out to eat, those types of things that really keep our economy going. So it could be a concern with the student loan payments resuming.
All right, good to know and keep in mind going into the future. Thank you so much for joining us.
Very welcome. Thanks for having me, Meredith.